My name is Dr. Gikonyo, Dr. Peter Gikonyo, to hear the money game plan. But before we build and come to money game plan, then we need to understand which is this game plan. We need to unpack the game plan so that we fully understand how does it look like, so that we are able to build on it and see how we can build on more investment. In most cases, I love knowing the audience and where you come, which field are you in? Because I can see we are different ages. I can see msee rafiki yangu, probably we could be nearing the clock. Me na Karaja, sasa these are now what we call our prime years now to be able to look for these resources, which you are saying that we are just trying to think of the money game plan, and we have the young fellows that whom I love most. The young fellow. And now maybe we can start. Maybe you just say your name and probably say the field you are in. That way, it will make me to have very practical examples to be able to guide you in this discussion. It will be more as a discussion. I'll not use the slide as much. The slide will just be a guideline, but just tell me, this is my line. Maybe if you're in business manufacturing, business health. Then from there, so that we can be able to understand each other. Probably you know each other, but me, I don't know you. That's why the reflection maybe for me is to fully understand and be able to see maybe what kind of examples I can be able to pick. Maybe we can start with the chair. Human resource management. Okay. Human resource. The greatest challenge we have for those people who are in business is managing the human resource. And now with the changing environment, the Gen Zs, the millennials coming out of the game, the Gen Zs coming in, then it becomes very, very, very hard for the human resource. And thank you to have good to have you. Now back to the discussion, because now at least I have an overview of the audience at which we are gonna speak to today. Then we need to start asking ourselves, and I will borrow biblically from the two examples. When Adam was placed in the when God created Adam and placed him in Eden, he was given a resource. He was given land, and he was told to go and multiply. The land had fruits and it had everything. In the environment you are in, because the way I've spoken to you, everybody says that I'm in IT, I'm in HR, I'm a student, I'm looking forward, I'm in business, I'm doing ABCD. You are in a certain land. You are in a certain environment that God has entrusted you in, meaning that there is an opportunity for you to make and to grow any resources available. Two, there is a story biblically of the several gentlemen when the owner of the talents decided to go on a journey. Then he decided to give these pharaohs the talents. Some were given, they decided to multiply. But there was that fellow who decided that since you have given me this talent, then I will hide it under under the mattress or wherever. He decided to hide the talent. Then when the masters came, and then he decided to say that you want to live where you have not sold. So the two examples will lead the discussion for the day. Are you a faithful servant? Are you willing to multiply? Are you willing to grow what God has entrusted you with? That's the basis. For you to grow wealth, the most important thing is not to have the resources. It's not to have the big money. The big resource is to have the mindset, is to be ready that I'm able to grow and to be able to push maybe whatever I have to a different level. I've just given an example. A young fellow called the young fellow who was called Gikonyo, and we can pick that as a local example, and we can even go further. We go to US, we can seek the guys who have done the APO and the like. When we were still students, they decided to develop, and maybe the gadgets that which we are using. But you see, at that level, his mind was open. The guy was ready that I'm in second year. When all of us, me and Karaja, during those days, we are looking forward, maybe we'll get employment. But he was fully decided that I want to take a different path. I want to go into a different direction. So the greatest asset you have today is your mindset. If your mindset is collapsed, then you'll not be able to grow and to be able to advance. Maybe you're well. So what I'm saying is the first point of investment is how do you deal with your mind? How did you deal with your mindset so that you can be able to open up and be able to have a different or divergent view. You have a divergent view of how you can grow wealth in a different level. Now, I said I'll start with something we call the personal finance. That's what you wanted to, that's what the chair told me, that we build on financial health, then we can build now on the investment later. So we have two sessions. The first session will be on the financial health. That's where we'll be talking about how do you build a strong foundation before wealth creation? How do you build a very strong foundation before you even start thinking of how can I be able to create or generate this kind of wealth? And when we deep dive into this, we'll be asking ourselves, if I was to ask you, how do you know, especially sasa nitauliza wazee kwa sababu nyinyi mko mbele yetu. Sasa nikiwauliza, how do you know that I'm financially stable? How do you know? Maybe mzee, how do you know? Maybe like how do you know that sahi uko sawa? Unajua kuna wakati unasikia watu wanasema niko chini kidogo. How do you know that hauko chini uko sawa? Yeah, the M-Pesa balance, or when you go to an ATM and you find that it's heavy. But it can be heavy, but you have the debt all over. So that's not a true measure of how financially wealthy you are. And the examples, how do you assess? Because I want you to use today as a mirror, as a reflection. How is my financial well-being? Take a toll. He can tell you that he's a banker. The bankers, you will think that they have money always, but they have an open check. They can easily borrow and get money all the time. So, but it's not their money. Yeah, how do you know that you're financially well? You are in good status. And one will see, whatever he said, is that you have money and it's able to impact you in your life. Then you're able to meet your current needs in a very comfortable way. And what do we mean by that? That you are able to assess that these are the current needs at which I have, and I'm able to meet them fully. If it's the transport, is the food, is the housing, is everything, I'm able to meet all those needs adequately. Then you also have the confidence and the security about your financial future. If something happens tomorrow, how will you handle that? You're the secretary, the secretary of the Kama. Suppose mtoto wako apate chance ya kuenda ng'ambo next year. Are you ready that can be handled now? If I was to ask you, I've just brought something which is out of Bruce now. Assume it's your daughter or your son. The other chance to go to US and to study there is 2 million fees per semester. Is it possible? It's doable. Okay, you may not answer now, but I'm putting this as a question to the entire group. That are you able to handle that confidently? Not only maybe US. If the kid is admitted to a certain school, are you able to pay? If they are in universities, are you able to pay? For you fellows now, the young fellows, are you able, now the financial goal for you is that do you have enough resources, even to be able to apply and even to go and seek for opportunities wherever they are? An opportunity might come in a different country. We play God, that may happen. Then are you able to apply for the visa, the whatever, the passport, and everything that which might be needed in good time? That's why I say that, do you have the confidence and the security about your financial future? It's not about the big monies you have. The big monies are big monies. But the difference between the person who is standing out is how do you manage the little you get? How well do you manage the much you get? That's what will make the difference about you and others in life. Now, why the financial health comes first? How is wealth built? It's built on something we call a structure. You must have a structure in place. And I'm happy because now what he saw is the right thing, that we need to start building a structure and saying that, I remember when I was a young fellow, I was a young banker, and how maybe the structure I was able to build the structure. I got a very good mentor a lady who was working in airline industry, and she told me that that time I was the lead salesman that time in Absa Bank, and I was told that come in with a full scope and lie to me the things that which you would wish to achieve, maybe in the next like 10 years. And I was able to list them. Then he told me that go and put that piece of paper safely somewhere in a file. Then after 10 years, I went and ticking. This is what I said. I wanted to buy a house. I wanted to buy a car. I wanted to have done my master's degree. I wanted to have enrolled for a PhD. I wanted to have ABCD. In short, I was able to build a structure at that very moment. And then I said, get a piece of paper so that you write something today. I want you to write something as a structure. Then following that, there should be discipline and the consistency towards achieving the same objective. The things that which I will go and highlight in the second session, that when we'll be saying that these are the various investment options, then how is the discipline towards that? How consistent are you in terms of achieving that kind of objective? And then you need to have the financial clarity. You need to be clear that this is a destination. This is a roadmap I want to take. And then you can be confident and you'll be able to make a sound investment decision. And I've mentioned here and said, and these, we can call them the senior citizens can attest to you, that a strong foundation is normally built on resilience and what we call the peace of mind. You need to have peace of mind. Bwana Karaja, I think the next session you'll talk of what can really clear a lot of disorganization to men when it comes to peace of mind. Let me tell you, if you're coming from a family where you don't have peace of mind, if you have kids that are giving you trouble and everything else, you have somebody who is ill, then the peace of mind will not be there. And it will be very challenging for you to do investment. So as men, maybe besides this session, you call it what? The Men's Connect Forum, yeah. So I believe that maybe in future, the counselors, it's good that we really talk about what could really be giving the men peace of mind, to lack of peace of mind. Because that's quite detrimental. I started by saying that if your mind is crushed, even if you want to invest in what, you'll be doomed. And I'll give you an example. Like in Elon Musk, you have seen, you have heard, you read about his story, that even in his life, that you'll find maybe how disorganized his life has always been, despite maybe having achieved so much. We can look at the guy called the legendary golfer. What do we call him? The guy who used to win the golf. Tiger Woods. How did he mess up his life? To a point that I play golf myself. That how was he not able even to play golf efficiently and well? When the lack of peace of mind came into his life, even his golf career came down crashing. We are calling an empire. Today, wherever I say that the God has placed you in the land of Eden, the talent God has given to you, if you don't have peace of mind, it can come and start crumbling down. So we need to see how do you fix also your life in a tangible way. Then, how do you know? Then how do you know that you're financially fit? What are the signs that maybe one that maybe now sasa siko baya sana? You'll say that you're able to pay the bills comfortably and on time. Then another way that you can be able to know that you're financially fit, because I said use this as a mirror. One, you ask yourself, am I able to pay the bills on time? Bila kuulizwa. And these bills can be maybe kuna rent, kuna stima, kuna shule, kuna chakula, kuna nini. Hauamuki asubuhi kuambiwa jana hukutuma hii. That's a bill from your partner. Are you able to meet that comfortably and on time? Then, are you able, because we'll be speaking of this, that we advise people that you are supposed to be saving about 20 to 30% of your income. Currently, you're supposed to be religiously be saving that by the end of the month. So are you able to save that income and consistently and be able to plan ahead for it? Then you also ask yourself that, am I able to prepare for emergencies and setbacks? Like now, last week, I'll give you an example of my case. What I did is that I lost my brother. We lost my brother when we were in campus those days. Then he left 2 sons. So I lost one of them through a road accident. And what we required was to pay the hospital bill. And then we were able to fit all what we needed for the burial procession, which was coming to about $1 million. It was just last week. Things just happened. An accident is there. You're told that you have to foot everything. Everybody looks up to you because you're the leader of the family and say that we must settle this. So how lady are you? That one made me to start thinking that I've already said and discussed about the financial readiness. Then I started asking myself that am I really walking the talk when I talk about the financial setback and emergency? That you are in Husu is a slightly distance away from me, but it came directly to me. So how was I able to navigate? And that's when I realized some of the assets that which will be speaking, they are intangible assets and the power of social and the networks, which are also probably not seen, but they come in very handy when maybe such kind of scenarios come in. But what we are saying here, how are you able to prepare for an emergency? And this we can be able to speak to. The emergencies can be dealt with. Maybe you have a health insurance, you have savings that which can be able to sort out all this. So how ready are you in terms of locking that? Then are you able to save for retirement, long-term goals? Hawa wazee wanaweza kukuambia labda retirement iliwapata tu ama walikuwa wamejipanga. You see, I see when now, because we speak so many people to the people who are crossing to the retirement, and you find somebody is clocking around because now he's 60, he's 58, 59, and he's not even ready where he'll go to. You are lucky at least you have a place you can call utawala. There is something you are doing. But imagine some people are given the wheelbarrows, you know, the civil servants from railways. Mlikuwa mnapewa wheelbarrows ama unaambiwa ukikaribia retire, si unaambiwa unapeagwa barua hata 1 year before. Unaambiwa 1 year before from the parastatal, alafu anakuambia kama kuna ofisi Eldoret, kama kwenu ni Eldoret ama Kisumu, unaambiwa sasa unatumwa Kisumu. They are preparing you for retire. Do you really want to face that? Maybe at that period. Then gradually building assets and wealth. That's what we'll be speaking to, because it should be an objective of each and every man today. And these men can tell you, especially for the young people, this tragic. I'm telling you, for young fellows, you need to start building something for yourself. Unajua hii ni kikao ya wazee. Mwanaume mwenye hana kakitu. Even that girlfriend dating, I'm not shocking you, but we are speaking in a church and being very honest. It becomes a social catastrophe. And that's why most of them are suffering as the Gen Zs. Because it's not like our days. Me and Karaja, we would call our girlfriends by then, Mungu, by the time we reached our age, na tungewapeleka kwa siba zetu kidogo. And they would accommodate that. The dynamics are different. Your dating life is different. Your social orientation is different. You need to be ready. You need to be able to handle those kind of issues. So that even when you start building the family, then you'll have built a very solid foundation that you'll not what we say, the peace of mind. Yeah? So this take it home and say that we need to do things right now at the right time. And I'm happy that you're together with us to come and listen to the good news and be able to build maybe the wealth together. Now, this is just basic. I think this one for you analysts, you know, how do you create your network? And I think this one, I want everybody tonight before you sleep. Everybody, these are take home. Tafadhali eda jioni uandike that the assets I have. Angalia ile shamba niko naye ni ya pesa gapi? Ile nyumba niko naye ni ya pesa gapi? Ile gari niko naye ni ya pesa gapi? Zile shares niko nazo ni za pesa gapi? Ile pesa niko naye kwa account ni pesa gapi? Then you also taking account of the liabilities. The liability means nimekopa pesa mahali kwa duka, niko na loan ya bank, niko na loan ya sako, nimeoa watu wa hire purchase, kuna mahali nilikopa rafiki yangu pesa, kuna mahali nadaiwa kitu ya kupeleka. Then you start assessing yourself. At that point then ujiulize, am I rich or poor? If you're reading negative, then we can say that you are a wealthy person. But why do we invest? Where do you think of investing? First of all, there is what we call the inflation. I just mentioned to them that if you Google now the inflation of Ghana today, it's crazy. In the country today, the inflation is not high up because it has been controlled by the government. But there is a lot of challenges when it comes to purchasing power. And you need to grow well through discipline and capital allocation. Capital allocation is that the resources you have, then we need to see how you can be able to allocate them adequately, and they can be able to help you to grow money in a bigger way. You need to secure your future income, and you have what we can call the future independence. Now, when you're investing, you see the questions you're asking me. What's your name, Nani? Charles Duku. Charles, the questions you're asking me, there is something you had in mind. The risk versus the return. You're asking me, what is the risky ventures? What can give me the high returns? So the core investment principles, you are in the right thinking. What is the risk? What is the return? Which I gonna get? The higher the risk, the higher the risk, the higher the returns. And the time horizons. You need to see this investment. Am I investing short term, long term? It needs to be fully aligned with your desires and your goals for the investment. Here I said, you don't need to put your eggs in one basket. You need what we call the diversification, so that you can be able to spread the risk across all investment options that you have. And you need to have different assets that which you are investing in. As we'll be looking down to we'll be breaking them down from all the items. And before I even start breaking them down, if you go to the YouTube, there is something that which I was able to develop now as a scholar. This one, it's yet to go to the Guinness Book of Records. Nasikia watu wanaenda kwa Guinness Book of Records, the young people, because of hugging the tree. But there is one I would wish that maybe scholarly item, that what I called it Dr. Gikonyo's theorem of economics. And we said, there is something I said 20, 10, 10 rule. And this will be breaking them down. So when we talk of the first 20, what are we referring to? When we talk of the second 20, what are we referring to? And then the second 20, the third 20, the fourth one, and the 10, and the 10%. So what are we referring to this investment? And this is what we'll say, that you are not putting all your eggs in one basket. You are breaking your resources in that category. And I want you to assume, especially for the young, we'll work with an investment of $1 million, Bob. The gentleman amenda, yule wa mashamba amenda. Ametoka hata rudi. Because I wanted to use him as an example to, maybe he has lost the bigger meat. So the 2020, what do we mean? That's what we'll be breaking down. The theory of investment, so that we have a full diversification. And the first one, this is what we'll be calling the shares. And these are different. There is something which we call the Nairobi Stock Exchange. It has been there. Najua wazee mmenunua shares hapa, mko nazo kidogo, but do you really see much return from those shares? Probably you never invested well in them. Or maybe you stopped. Because you invest the shares, so that you can get what we call the value. The share value keeps on increasing. Maybe during your time, the KQ, East Africa Breweries, those were the high-end. The Kenya Commercial Bank, the National Bank, those were the shares at which were, they really had a significant exposure then. but things are different. Maybe what you never did right is that you were never able to buy enough shares so that you can be getting what we call the dividends from time to time. So create a buffer and say that maybe an investment of you have $1 million, then 200,000, it will go to shares. If you have 200 and then you have the dividends ratio, if you buy the shares of Equity today and then you're able to get maybe one share, you are getting like 30 cents, you'll get substantial amount of money by the end of the year. And the share continues also to grow in capital. It keeps on increasing. So what we mean by the shares is the ownership in listed companies. There is what we say that the capital appreciation and the dividend income. Capital means that if you invested the 200,000, probably it would grow. Right now, there is a IPO we are waiting for, which is starting next month. For which company? It's widely advertised by the government. Kenya Pipeline Corporation. So when we'll be analyzing, maybe the shares to invest in, of course, they're selling these one at the 9 shillings, and of course, their dynamics allowed it. So there is a bit of caution that the shares prices might really go down immediately that is floated to the market after this initial price offer. Because of course, they're pricing it so highly. When you look at there's something that which for the analyst we look at, we call them the market capitalization of this share and how that company is performing. Then we think that probably there could be some dynamics around it. But there are better shares that maybe to look at. There's some beautiful companies. When I say that maybe whatever you need to look at, whatever you're asking, how do you evaluate the shares? You need to be evaluating that how is earnings growth? How is that institution making profit? Ukiangalia gazeti ama kugugu, just be Googling what are the trends, the current share prices. And the banks are always making money when it comes to the earnings growth. There is huge profitability trends. And this can guide you when you are picking the share to go and invest in. I don't invest in shares of 20,000 and say that's enough. No. Hawa sasa watakwambia kama walinunua 20,000 anasema akona shares, probably he gets 1,000 or 800 shillings as the dividends per annually. You need to invest deliberately. The same way you say that I've built a house of 8 million. Probably you say with that 8 million, 20% of that 80 million should be in shares form. So what I say is that 80 million, 20% of 8 million is what? Is about what? 1.6 million. 1.6 million of the house should be in shares form. So wakati ule ulikuwa unajenga nyumba yako ya kuishi ya 80 million, then you need to have built the shares which is about 20%, both of that investment pressed in a company. And if you get the dividends, you'll find it's huge money. And you'll be getting dividends from time to time. And this one, I'll also encourage. There is something that which I'm teaching people, and that's why I was so keen when you're talking about that you are in the business of international business, where you are export business of agricultural products. There are so many people coming in. They're called venture capitalists. And capital investors. Those two things. These guys, they have liquid cash and they are looking for the businesses, even if it's a startup, to come and invest in. Now, what I've been thinking, I've always been telling people to go and buy the companies to go and invest in the companies in the Nairobi Stock Exchange. But maybe among you, like now he is employed as a regulator. He has an idea. You said you're in agro industry, right? Suppose your company, you're able to open the company and all of us come and invest in that company. How does that one sound? Of course, you need to put very proper structures in that company. Not only investing in NSE companies, look for other viable businesses and invest your money in. Of course, there are other parameters that which I would advise you to go for, like legal structures, the governance structures to ensure that your resources are well covered when it comes to that kind of arrangement. But I'm just saying that, remember we said the higher the risk, the higher the returns. It's always good to look at the ideas which people have and see where you can be able to come in and be able to invest and pull the resources together. When there were the old fellows, they could be slightly older than you. When you wako kule Lwadhi, unaona kule nani alikuwa Lelwis? Si wewe ulikuwa Lelwis? Maybe during your age, unajua kina Gikonyo, those Lwadhi mafias, those old fellows. Probably, yes, you know them. Magomano, yeah, they formed what you call the companies. And in the evening, unajua the reason why they say that the Molanga people were able to invest more is because the reason is that, you know, the Kiabu people would come to Nairobi, then they go back in the evening. But now the Lwadhi, because they couldn't go back, they were sitting together. They formed companies. Those companies are still in existence today. They are called Lwadhi distributors. You'll find an old museum of 100 years. It's still the chair. They were able to build those buildings then. Right now, I'm not saying that you go and build the buildings, but you can apply the same principle and unite and buy shares in a company and start an agro industry, invest in agro industry. Others could be in healthcare or education institutions, buy shares and invest in. Look at the viable investment options and be able to invest in them. There are so many people who are willing to come in and looking for people to invest in these kind of businesses. But I've also said that you need an expert so that your investment is well guarded in terms of that structure, so that you're not swindled money. Unajua watu wengi ni mataperi. So that needs to be done. So here, when you talk of shares, then look for other businesses that which you can also go and buy shares in and still get the returns by the end of the year. Now, the next 20% is what somebody was interested in, the money market funds. This is a new thing, and especially all the young people, they know what it means with the money market fund. This is now the new Quilo business. You remember there was Quilo business? There was Quilo business. There was which other one? There was those people who are looking for those German stoves and saying that they want to sell those metallic items for money for kill. No, but this one is not like that. This is a different form of investment. And I would encourage, the same way I said that if your house is 8 million, then you need another 1.6 million in an MMF, money market fund. And one of the advantages of this that they are low risk and high liquidity investments. They are fully regulated by the Capital Market Authority. So the way they operate, they are fully regulated. And they focus more on capital preservation, and they are deal for short-term savings and the emergency funds. Now, you ask me a question. Ordinarily, I'll not tell you that go and pick this MMF because I'm not really doing marketing for any institution. But I give you the parameters to go and assess and see which is the best money market fund for you to be able to invest in. And what we look at, there are some parameters. Evaluation of the money market fund. What do you evaluate? What will you look for? You need to look at the consistent and historical returns of that fund. Right now, on average, is about 7 to 80%. Most of the investment, money market investment funds, they are paying interest about 7 to 80% per annum. Then also look at how is their management fees. There is one, and here, maybe you're not recording, which is being sold by Standard Investment Bank. It's called Mansa. How is it? What are people saying about it? Or those who have invested in it?
I have had the consistent return.
You have had the consistent returns? Okay.
They have given 15% so far.
50%? 15%, eh?
Yeah.
Or even higher?
This year they have done 20%.
They have gone even higher, even 20%. But I put a disclaimer, I've not invested here. I'm not a risk taker like you. Because maybe probably for these parameters. But it's there. It's fully regulated by the Standard Investment and CME. But the question is that where do you go and invest that money and get the 20% return? That's my question. Probably today you'll get, but what about the future? That's what I'm not certain of. That's why maybe probably I'm shying away. Okay, anyway, I leave that. I leave that. You know, we are talking about offshores. You know, when they talk about offshores, you know what are they say that they're talking about? That they go invest in foreign currencies. They hedge in dollars, in euros, and the like. In the gold from DRC and the like. And they also pull these monies. They look for, you know, these guys who are coming with the venture capitalist funds. They want to invest these funds. They come and invest there. Then they give these people so that they can come and invest and get these returns. Anyway, I'm not speaking about it, but do proper analysis. And what I would advise is that don't put all your eggs in the same basket. So assess the money market fund that which you're going to invest in and ensure that it's credible and your fund, you can be able to get them in future. The fast and reliable withdrawals. So that's just part of what you look at. And the credibility of that institution. Had you invested in Saiton, high yield fund? Yeah. Go and lead why. What happened to those people who had invested in it's a similar product. Saiton high yield fund. I give that as a homework. Go and lead and see what really happened. And they were not able to pay the returns and they had already guided. Although this one was a bit tricky because the CMA had not approved that kind of product. I'm saying that look at the stable, the money market funds and be able to invest in them. I hope I've answered your question in a different way. I've not given you this one, go to this, go to the other. It depends on your risk appetite and what you want to assess yourself, or you want to invest in. Now, the other next 20%, because this one I'll still keep on insisting. There is something which we call the REITs. You have seen, no. I could have gone to, although this one we could have grouped them. I can group them, this one with the ETFs. These are also part of investments. The ETFs, they are called exchange traded funds, ETFs. Ziko, ukiangalia kwa NSE, these are burdened shares from international market, which you can be able to invest yourself in. But these one, they are track indexes and assets classes. They are also similar to the shares. The risk is very minimal and they are burdened, yes? No, they are. Yeah, they are. They are called ETFs, I'll give you the names later. No, there are two. I'll give you the names before we finish this. I want to get the precise names for the ETFs. I'll give you the names maybe by the end of this presentation so that I look for the name. But there are two which are already listed, which are doing very well, the ETFs. Sorry? No, you see, they can be global. They access even the global market. Yeah, they are a traded instrument from different different sectors, yes. But they are bundled together. So you buy as a bouquet. So the concept is, you see, in NSC, you are buying Kengen alone. So this concept is you buy one in energy sector, you buy another one in finance sector, you buy another one in insurance sector, in fast-moving consumer goods. They're all bundled together. So you buy as a one unit, but it also has a different value and a different significance. Yeah. Good question. Good question. Then these one are bundled together with the REITs. They're called real estate investment trusts. Hizi ziko mingi. Si unaona zile zina the student hostels being built around universities, kwetu nini. You know, those are also good real estate investment options. You can go and buy some shares. They're also traded through NSE. So you go and buy shares for those kind of investments so that you can also be getting the dividends. So this one allows you not to get into the building and construction. You don't need to build. You're buying shares to this company, the Home Africa and the like. Those who are building the hostels, then you'll be getting the returns by the end of the year. That's what it means, the real estate investment trusts. They are called REITs. The earnings from the property portfolios and the regular dividend payouts and the low entry cost direct to property ownership. Because you can buy as minimal as 1 shilling. Because those shares now they're being traded by M-Pesa. Once you open your account, I think you can be able to continuously buy those kind of investments. So what I'm saying that maybe in this 20%, be able to see how you can be able to group this, maybe this investment together. Then we have the real estate. And now the real estate, all of us, I believe that we have invested here. But now the dynamics are changing. That's why I'm saying that Akina, the Rwadia group, Akina Gikonyo, they all went to buy land in Kirinyaga Road. Now, you came here, you bought land in Utawala when it was prime. That's quite encouraging because you need to invest about 20% of your income. Still in real estate, but not idle land. Please get me, don't go and buy idle land because we have bought them. You go in Kisanju, you buy 1 acre piece of land. To do what? To generate what? To wait for who? To come and take it and to inherit. No, if the land is not in basic principles of economics, because I think this one you did, land is part of capitals of factors of production is land. But it's only factor of production if it's put in the right use. Buy it in a very strategic place and see what it can be able to generate resources for. If you're buying land, do agriculture there. If you're buying land, real estate, invest probably the houses and the like. But also do proper maths on what we call the ROI. Don't just build for the sake. Because many people are suffering. They have the building, yes, but they were not able to assess the return on investment of that kind of investment. And they're not able to generate them more resources. They could have been easier for them. I had a Kwasaku, maybe a good circle, and then invest all the money there, and then you'll be getting the dividends by the end of the year. You are more happier that way, rather than building a property of 20 million, then you're not able to measure what we call the return on investment. What I'm saying here, do a proper analysis, what we call the feasibility of each and every venture, and be able to invest in it. Msiende kununua huko Kamuru ndani. If it's strategic, that's good enough. Buy in a very strategic place, somewhere you can be able to dispose. Watu wanalia ja na wako na mashamba kwa nyumba. Somebody says that niko na shamba bili wapi, but if you start selling that land, you can't liquidate that money. It will take ages before you liquidate. So assess for the real estate investment in a very ideal place for you. Then the other one, is this one we could have put. This one is the treasury bills and bonds. Those are two different entities. The treasury bills, these are the government securities. The treasury bills are short-term in nature. They are given 30, 182 days, 365. They're given, they're short-term in nature, 90 days, 30, 60, 90, 180, 365 days. So you buy the treasury bill, the government sells. That's how the government borrows money. That's what you're asking. How does the government borrow money from you? It sells what you call the treasury bills, and the returns are good. They're not badly off right now. Because when you buy the treasury bills, they have a fixed term. You will be getting the returns. After 6 months, after 6 months, after a year, even after maturity, then you are able to get your investment back. But the bond is long-term in nature, ideally about 30 years. There is what we call the infrastructure bond. Like there is one which they're floating, maybe by the end of this month. And this one, what happens once you buy the treasury bonds, the returns you get them after 30, after 60 days, after a year, progressively, then you'll get your capital upon the maturity of the entire investment life of that bond. So here, also look at what maybe the amount of money you can be able to invest in what you call the treasury bills and the treasury bonds. There is a reason why I gave this one to 10%. Because it's more futuristic. And some of them, because of the concerns you raised, it's all dependent on how the government decides to play the ball. Yeah, then The 10%, this one I had grouped it together. This we call it cash. The shares in SACCO and the like. These more liquid instruments. Look at how you can be able to have cash in the bank. And this one you can have instruments like the core account. The core account, the fixed deposit account. So don't put your money in the bank if it's not earning a shilling. Tafadhali kama uko naye 100,000 kwa bank and it's not earning any interest, go and withdraw. And put it in a more place that where it's giving you more returns. So tell the bank to give you what you call the call account. Even if it's a minimal interest rate, maybe these ones could be averaged to about 4 or 5% annually. The call fixed deposit account, this one could be going through the treasury bill rate about 8 or 7%. But have some investment in terms of what you call the cash and cash equivalents. You have talked about that. I talked about the venture capitals and private capital. This one I will insist. Tafadhalini, look for the business, the current business. There could be people who want to do manufacturing of a certain item. If they have a viable and a tangible business idea, look for how the governance structures can be put in place. And here the technical and legal advice is needed deeply. This is where you require my services, Bwana Karaja. Now you'll have to pay me more. If you want to get into venture and private capitalist, then you need to invest in somebody who will advise you so that you can have the caution of your resources before you get into this. And this one we could have done. If we had time, we could have done that. I say that in groups of 2, identify a company that which you can invest in, but this one, it will be a take home for you. It's a take home. Take this, then you go and assess a company which you think you can be able to invest in and give you a time frame. Like maybe a year from now, I want to buy shares in an existing company. Of course, not all the money. I talked about how much. If you are to invest, probably the 20% of your income. Don't put your eggs in one basket, but look for the viable venture, because the future of the country is in this what we call the SMEs, and more so in the manufacturing industry. If we have to have the game changer, the problem we have with the unemployment of the youth people, it can only be solved by us making that decision, growing the SME sector, growing these small businesses, and we are able to do that. Then the other one, I think this one we can do, because naona watu wakilala. Unajua inasema the retention rate of the content inakuwa inaenda chini. So I'm winding up. So I'm trying to hurry up. So we are saying the smart assets allocation, this one we have already discussed. The MMF, the boards, the shares, the ETFs, the income, rates, and property market. That's what I've said, that you need to distribute your investment options so that they can really encompass all that. But I want you to do this in the full scope that I gave you. Assume you have 1 million today. How will you invest it? That's an individual activity. In the full scope that I gave you.